Good morning! Let's continue with our lesson. IP number 10. North Shore Brewery produces and sells two grades of beer, premium and regular. Premium sells for 10.5 per case, while the other one sells for 7.4. The variable brewing cost per case are 5.10 premium, 4.25 regular. Sales of the regular beer in cases are double those of premium. Fixed brewing costs are 600,000 monthly, and fixed selling and administrative costs 375,000 monthly. The only variable cost besides variable brewing costs is 10% sales commission. Requirement number 1. Compute the break-even point in total cases per month. So for the break-even point, still the same. Total fixed cost divided by the contribution margin. Depende kung in units, then CM per unit. Dito ang tanong ay total cases. So per unit tayo. This is perhaps our first time to solve a multiple product company. So one of the assumptions that we have told you at the beginning of this topic, one of the assumptions is that the company sells only one product. Okay? One of the basic assumptions. But if not, because the company is a multiple product company, you must assume that the sales mix is constant. And it must be consulted or considered in coming up with the so-called weighted average contribution margin. Alright? So for regular, sulat na lang natin dito, your selling price is 7.4. Unahin natin isulat yung regular. For premium, the selling price is 10.5. The variable cost for regular is 4.99, I believe. 4.99. So how did it become 4.99? Meron tayo ditong 4.25 variable brewing cost, so 4.25, and a 10% commission. Ilan yung 10% ng 7.4? That must be 0.74. So adding them together, you come up with 4.99. For premium, 5.10 variable brewing cost per case. So, ayun, nakalagay dito, 5.10. And 10% commission, syempre based on sales, 10% of 10.5 must be 1.05. So, adding them together, it is 6.15. So, ito ay 6.15 naman. Our contribution margins should therefore be 2.41 and 4.35. 2.41 and 4.35. So with this, we have to compute for the so-called weighted average contribution margin per unit muna. And the procedure is to multiply the individual contribution margin per units times the so-called sales mix. Ayan, sales mix. So in this case, ang sabi, sa bawat benta mo dun sa isa, dalawa naman ang nabibenta mo dun sa kabila. So, ibig sabihin, kung dalawa ang nabibenta mo kay regular at isa lang kay premium, the ratio is 2:1, or 2/3 for regular and 1/3 for premium. The sales mix is assumed to be constant for purposes of computing the weighted average contribution margin per unit. The sales mix given here is in units. Sales mix in units. So 2.41 times 2/3. To be exact, it is 1/91/150. To be very precise. And 4.35 times 1/3, that is 1.45. Could you please add this one? This one is exactly 3/17/300. Ayan, to be very, very precise. Now that you have computed for your so-called weighted average contribution margin per unit, you go back to the assumption that as if you are now computing for a single product company after arriving at the 3/17/300. So, total fixed cost, still number 1, you have 600,000 plus the 375,000, alright? So, 975,000 yung total fixed cost natin. Total fixed cost divided by the contribution margin per unit, 3/17/300. 300. That must be ilan? It is 318,974.9182 units. Okay? That is our answer to requirement number 1. Number 2, how many cases of each kind of beer are sold at the break-even point? Ilan ang nabibenta of each kind are sold at the break-even point? So, very simple. Since we have determined already that the sales mix is 2/3 and 1/3, okay? For regular, it is 2/3. And for the premium, it is 1/3. You simply multiply. Sa 318,974.9182 units, 2/3 dyan should be regular. And that is 212,649.4.94, I should say, 55. Alright, that is your regular. And the remaining, therefore, times 1/3 must be 106,324.9727. Okay, 106,324.9727. Okay, for the premium. This is to satisfy requirement number 2. Okay. Number 3, the brewery is now selling about 350,000 cases per month. The advertising manager believes that sales of premium beer could be increased by 20% if extensive advertising campaign were undertaken. The campaign would cost 80,000 per month. However, sales of the regular beer are expected to fall by about 5% because some customers now buying the regular grade would merely switch to premium. The question, should the campaign be undertaken? So, in questions as broad as this, should the campaign be undertaken? Again, the basis would be the effect dun sa ating net income. If it increases, then go on. If not, then do not proceed. Now, is there an incentive to increase the sales of the premium beer as compared to the regular beer? The answer is yes. Why? Because the premium beer presents a higher contribution margin per unit as compared to the regular beer, 4.35 versus the 2.41. So kung 350,000 currently ang ating nabibenta, alright? I think we have to erase some here right now. Okay, so for number 3. So kung 350,000 nga yung ating nabibenta units and 2/3 represents regular, that one would be 233,333 and 1/3 units. And the premium 1/3, that must be 116,666 and 2/3 units to be very exact, times the 2.41 na na-compute natin kanina, yung contribution margin per unit ng regular. 2.41, let us show you once again here, 2.41 and 4.35 para rito kay premium, ilan yan? Could you please multiply? That one must be 500, could you please check? 62,333 and 1/3. Please do not be passive, okay? Be attentive para sulit naman yung panonood mo rito. 562,333 and 1/3 and 507,500. Totaling this one would be our total contribution margin at 1,069,833.333. Ayan. I-deduct natin yung total fixed cost natin as computed kanina din. Let us show you once again. Nabura na natin pala. But that is yung ating 600,000 rito at saka yung 375 natin doon or 975 deducted dito. Right? 1,069,833.333 less 975,000. The net income therefore currently should be 94,833 and 1/3. Alright? Now, under the proposal, ito yung currently na nangyayari. Alright? Currently. Under the proposal, let's label it proposed, ano gusto mangyari? Si regular daw ay mababawasan ng 5% dahil tataas naman ng ilan ba? 20%. Yung 5% being shift from the regular to the premium. Lilipat daw lang yung 5%. Ibig sabihin, si regular ay mababawasan ng 5%. So, that is 233,333 and 1/3 units less 5% So, multiply mo na lang ng 95%. Class po, pwede ka agad dito, bawasan mo ng 5% yan. Same lang yung ma-arrive mo. It's just that we're trying to make a point here para later on, ready tayo sa pagsagot sa next requirement. Siniset up kasi natin yung response natin sa susunod na requirement. So, we wish to show 221,666 and 2/3 as the number of units remaining times 2.41 ulit or 534,216 and 2/3 for regular pagka nasunod yung proposal. Yung premium naman, 116,666, ito tinutukoy natin, and 2/3 times, increase it by 20%, 1.20. So it becomes 140,000 units. Itong dalawang to kasi units to, alright? So units yung 140,000 times 4.35. Yun yung ating CM per unit ng premium ulit. This one should be ilan? 609,000 eksakto. This is our total contribution margin. 1,143,216 and 2/3. Our fixed cost, total fixed cost, would now be different. Kasi ang sabi dito sa particular requirement na to, there should be an extensive advertising campaign to bring about this change and it would cost 80,000. So yung dati nating 975,000 ay madadagdagan ng 80,000. So the new total fixed cost would be 1,055,000. In turn, the income becomes 88,216 and 2/3. Comparing the two, you should come up with the decision. Kasi dito, 94,833 and 1/3 versus 88,216 and 2/3. If you proceed with the proposal, profit should decrease. Okay? Profit decrease by 6,616 and 2/3. Doon sa tanong, should we proceed? The answer, no. Do not proceed. Lest you experience a decrease in profit. 6,616 and 2/3. Requirement number 4. If the campaign were undertaken, what is the weighted average unit contribution margin? Sulat natin uli sa baba. Alright? Dito na lang muna, burahin na lang natin for IP number 11 later. Alright? Still, IP number 10 tayo. Weighted average unit contribution margin or CM per unit. Your total contribution margin, let's take a look dun sa ating solution, is 1,143,216. Alright? 1,143,216 and 2/3. Palagay dito. Divided by the total units. Under that situation, ilan yung total units natin? Ayun. Kaya sabi ko, gusto nating ipakita yung number of units dito because it is in preparation of the next requirement. 221,666 and 2/3 plus 140,000 is 361,666 and 2/3 total units. Yun yung pang-divide mo dito. 361,666 and 2/3 units. Please divide. Ilan tayo dito? It is 3.161. I believe this is rounded. Okay? Pero wag na natin pag-awayan yung rounding off. Weighted average contribution margin per unit. 3.161. Or, if you're very curious and you think the customary way should be the one that must be followed, same lang din yung figure na madadatnan mo. For regular, for premium, just to satisfy the itch dyan sa yung utak, okay, tuloy natin. Contribution margin per unit, 2.41, correct? And 4.35. These have been computed already. Makikita natin dito, okay? 2.41 and 4.35. Sales less variable cost. Times, ilan yung ating ratio? Ay, very simple. Kukunin mo din lang dito. So, same lang talaga ang madadatnan mong figure. 221,666 and 2/3 over ito. And that must be 19/31. Ladies and gentlemen, 19/31. And this one must be 12/31. Now, parehas lang talaga. Kaya mangyayari dito, this one must be 1.4771. Alright? And then, 1.6838. Pag pinag-admin dalawang yan, syempre, 3.161. Alam mo din na parehas lang kalalabasan because of the ratio, yung ating sales mix, but we are to remove those doubts in your head kasi baka ganito yung nakasanayan mong format on how to compute. Alright? Okay, last requirement for this problem. What is the new break-even point in unit sales? So pagka nagkataon na nag-proceed tayo dun sa proposal, ano mangyayari? Ilan yung new break-even point in units? Very simple. This is still IP number 10. Okay, class? Dito lang natin sinulat kasi hindi nakasya dun. Ilan ba yung ating total fix pagka nagkataon? Under the proposal, ang mangyayari, the total fixed cost is now, ito po, 1,055,000. Okay, 1,055,000 over 3.161. I repeat, this is rounded. So, yung mako-compute natin na sagot, 333,755 is not very precise, pero decimals lang. I think ang eksakto dyan, 333,758 point something. Ayan. So, ito ang ating response for number 5. Okay, let us erase this now in preparation for your IP number 11. IP 11. The company produces 3 models of pencil sets, regular, silver, and gold. Price and cost data are as follows. Regular, 10. Variable cost, 6. Silver and gold. Therefore, let us compute for our CMs per unit. Alam natin, di tayo makakaligtas. Kakailanganin din natin later. This one must be 4 pesos. Kita mo yan? 10 minus 6, kinakalculator mo na ngayon. 40%. Most especially, as I have said, pag nandun ka na mismo sa examination site at kinakabahan ka na, lahat yan kakalkulatorin mo. Baka pati 5 plus 2, sabi ko sa'yo, kakalkulatorin mo. Because of mixed feelings. Siguro excited kang maging CPA if you're very confident, o kaya yung kaba mo, i-convert mo na lang into excitement. Ayan, para hindi ka masyadong ma-distract. Kasi yung kaba, madaming tinatanggal sa'yo yan eh. Alright? So, dapat, kalmado ka lang. This one would be 40%. Silver, 20 minus 8, that is 12. And it is 60%. And 30 minus 15, this is 15. And of course, it is 50%. Let's go to the first requirement. Which model is most profitable per unit sold? Of course, sa number 1, the answer, gold. The one with the highest contribution margin per unit. Number 2, which model is most profitable per peso of sales? Answer, of course, silver. The one with the highest contribution margin percentage. Per peso of unit sold, ang sabi. So, ibig sabihin, kay silver, sa bawat piso na nabibenta mo, it turns out, 0.60 doon becomes contribution margin. That is beneficial to cover your fixed cost. So, per peso of sales, doon tayo kay silver. Okay? Number 3, suppose the sales mix in pesos, please take note class, is 40% regular, 20% silver, and 40% gold. Number 3, letter A. Let's answer your number 3, letter A. What is the weighted average contribution margin? So, nakakompute na tayo nito kanina. Repaso lang ulit. Regular, silver, and gold. Contribution margin percentages for regular, okay, 40%. For silver, 60%, 50% for gold. Alright? Our sales mix in pesos, as given in the problem, is 40%, 20%, 40%. Pansinin, kung ang binigay na sales mix ay in pesos, sales mix is in pesos, ang kapartner niya contribution margin percentage. Pag naman ang binigay ay sales mix in units later on, dito sa ating number 5, ang kapartner niya ay contribution margin, not percentage, but per unit naman. So here, 40-40, 16%. Plus, 60-20, 12%. 50-40, 20%. Could you please add? 48% is the response to letter A. Weighted average contribution margin, 48%, right? Number 3, letter B. Tanong, what is the monthly break-even point? O, di-divide mo lang ng 48% yung ating monthly fixed cost, 200,000. Divided by 48%, answer, 416,666 and 2/3. Final answer. Alright? Next, number 3, letter C. What sales volume will yield a profit of 30,000 per per month. Sales volume will yield a profit of 30,000 per month. Di madali lang. Sabi natin, after computing for the weighted average contribution margin, we assume that we are now, again, computing for a single product company. So, normal procedures na tayo. Parang nung mga naunang problem na lang. Income, okay, ang given dito ay 30,000 per month. So, 30,000 sulat mo dyan, 200,000 naman dito, 230 therefore dito, then you divide this by 48% as computed sa taas. Okay? This one is therefore 479,166 and 2/3. Ang tanong, sales volume, so peso sales. Ito na yung final answer natin for number 3, letter C. Okay? Number 4, suppose the sales mix is in pesos, again, 30, 30, 40. Hindi compute tayo, same exact procedure. Iba lang yung ating mga figures. Regular, silver, and then gold. Once again, dahil ang binigay sa atin, sales mix in pesos, so ang kapartner na naman yan, contribution margin percentage. Ilan tayo dyan? 40, 50, or 60, I should say, and 50%. Okay? Yan yung given kanina dun sa problem na kinumputan na natin. Ayun o, 40, 60, and 50%. Times the given sales mix in pesos, you have here 30%, 30%, and 40%. So, 40, 30, 12%. 60, 30, 18%. 50, 40, 20%. This one must be 50%. Okay? Okay, nothing left to do but to divide the fixed cost. Ilan yung ating fixed cost na ulit? 200,000 by 50%. Answer, 400,000. Next, number 4. This is 4A. Next, number 4, letter B. What sales volume is necessary to earn 30,000 per month? 30,000 per month. The sales, okay, variable cost, contribution margin, fixed cost, and then you have your income. You have here 30,000, 200,000, 230,000. Divided by the computed 50%. Ilan po tayo dyan? 460,000 pesos. What sales volume is necessary to earn? So, peso sales ang tinatanong. 460,000. We go to number 5. Suppose that the sales mix in units is 40%, 20%, 40%. A. What is the weighted average unit contribution margin? Okay, pakitanggal mo na lang yon. Then, our number 5, letter A, should be as follows. Same old procedure. It's just that this time, ang binigay, sales mix in units. So, as explained kanina, mga kasama, ang kapartner ng sales mix in units, of course, yung contribution margin per unit din. That is, regular, silver, and gold. Ilan na nga ba yung ating unit contribution margins? 4, 12, and 15. Okay, so simply 4, 12, and 15. Sales mix in units, as dictated in requirement number 5, it is 40, 20, 40. So 40, 20, and 40. So 4 and 40%, it must be 1.60. 12 and 20%, it must be 2.40. 15 and 40%, that must be 6 pesos. So all in all, it must be 10. Weighted average contribution margin per unit. Yun yung tanong dito sa letter A. Letter B, 5B. What is the break-even point in total units? Di madali din lang, 200,000. In total units ang tanong Fixed cost divided by 10. Simply, the answer, 20,000 units. Letter C. How many total units must the company sell to earn 30,000 per month? Di parang kanina din lang. I-work back mo lang. Sales, variable cost, contribution margin, fixed cost, and then income. So this is 30,000, 200,000, 230,000 divided by 10. Final answer, 23,000 units. 23,000 units. IP number 12. The statement of income of Davao Company presented below represents the operating results for the fiscal year just ended. The company had sales of 1,800 units in number of tons of product during the current year. The manufacturing capacity of Davao Company's facilities is 3,000 tons of product. You have sales of 900,000, contribution margin of 405, total fixed of 247,500, and net income of 94,500. What is the break-even volume in number of tons for the year. So class, your IP number 12 is an actual CPA board exam question. Actual CPA exam question. Madali lang naman siya. Binigay sa board exam eh. Okay? When they gave this in the board exam, there were 5 exact same requirements as we have here. Of course, multiple choice yan nung nasa board exam. Tinanggal lang natin yung choices. We know that from our conversations with the examinees, humihingi kami ng feedback para malaman namin kung effective ba yung discussion natin sa classroom. Sinasabi naman nila, sir, yung handout po natin, lumabas po sa board exam itong problem po natin na ito. Ayun po, lumabas din. Ito lumabas din, binago lang po ng konti yung requirement so that we can improve on the materials that we are using. So, this is one of them. This is one of those problems. So number 1, break even lang ang tinatanong. O, di ba? O, madali lang yan. So number 1, syempre, baka naman matakot ka. Hindi, talagang ganun sa board exam. As we have said, more than half of the questions are easy. Okay? Total fixed cost, the problem may be presented differently, but then the concepts are still the same. Total fixed cost, 247,500. Divided by, ano ba tinatanong? In tons or in units. Contribution margin per unit. So, ilan ba tayo dito? 405,000 divided by 1,800. That must be 225 pesos. Final answer, 1,100 units or tons. O ayan, may 1 point ka na sa CPA board exam. Alright, number 2. Davao Company is considering replacing a highly labor-intensive process with an automatic machine. This would result in an increase of 58,500 annually in manufacturing fixed cost. The variable manufacturing cost would decrease 25 pesos per ton. What is the new break-even volume in number of units? O, the same pa rin, okay? Same pa rin. Yung procedure, okay? So, for number 2, dito na natin susulat, 247,500 originally yung ating fixed cost, plus yung sinasabi niyang increase na 58,500. Thus, it becomes 306,000 divided by contribution margin per unit. Ilan po tayo dyan, mga kasama, mga kapatid? 225 pesos plus 25 pesos. Bakit? Yung itinaas, yung ibinaba, I should say, decrease, na 25 pesos sa variable cost, yan din naman ang itataas ng contribution margin mo since there was no change in the selling price. So, this one must be 250 pesos. Loud and clear. Are you following? This one must be 1,224 units. 1,224. May 2 points ka na. Alright? Board exam question daw ito. Nagbibigay pala ng ganyang kadali, sir. Oo naman. Ano ka ba? Number 3. If the sales volume is estimated to be 2,100 units in the next year, and if the prices and costs stay at the same levels and amounts next year, what is the after-tax profit that the company expects for the following year? Paano daw kung naging 2,100 tons next year? Same everything. O di, madali lang. 2,500 unit, 2,100 I should say units times the contribution margin. Go back to the original data, di ba? 225 yung ating CM per unit. Ito, times 1/8. Original data. Total CM should then be 472. Could you please check my arithmetic? 472,500 less the total fixed cost of 247,500 original data. Then our income before taxes should be 225,000 times 60% na lang kamo tax complement. Kasi yung ating tax rate dyan ay 40%. So times 60%. Final answer therefore, 135,000. Response for number 3 requirement. Number 4. Okay? Ito yung ating number 4. Dito na lang din natin susulat. Davao Company plans to market its product in a new territory. The company estimates that an advertising and promotion program costing 61,500 annually would need to be undertaken for the next 2 or 3 years. In addition, 25 pesos per unit sales commission over and above the current commission to the sales force in the new territory would be required. Question: how many tons, how many units would have to be sold in the new territory alone, ang tinatanong, to maintain the company's current after-tax profit of 94,500. To maintain 94,000. So, very simple. Very logical. So common sense would dictate na kung gusto mong i-maintain, to maintain means to not change. It should neither increase nor decrease. Yung 94,000, ibig sabihin, kailangan, yung mabebenta mo and the income that you will derive therefrom must also be zero in the new territory. Because if your income there, if you will have an income there, then that would add up to the 94,500. You will not maintain the 94,500. It would increase. Okay? If your sales there and eventually that sales turns out to be insufficient to cover the fixed cost also in that area, then there would be a loss there which eventually would be deducted from the 94,500. Then in that case, you would not have maintained also the 94,500. In effect, number 4 is asking you of the break-even point in the new territory alone to maintain and to not touch the 94,500. So how would we respond to your number 4? Very simple. The fixed cost, kumpitan mo ng fixed cost yung new territory lang. Ayan. The fixed cost there is 61,500. Okay? Divided by the contribution margin also in the new territory alone. It says here, there is an additional 25 pesos per ton. Okay? Sales commission, that is variable cost. An increase in the variable cost is tantamount to a decrease in the contribution margin without any change in the selling price. Therefore, the CM of 225 originally less 25, you have here 200. 61,500 divided by 200, final answer, 307.50 units in number of tons. Nakakaapat ka na, huli na lang. Ayan, magagat all mo tong CPA board exam question na to. Assume that Davao Company estimates that the per ton selling price would decline 10% next year. Variable cost would increase 40 pesos per unit. Fixed cost would be the same. What sales volume in pesos would be required to earn the same after-tax 94,500 next year? So with that, we make the necessary adjustments. Ang selling price natin, could you please take a look at your problem? The selling price here is 900,000 divided by 1,800. I think that is 500 pesos. Could you please check? Is it stated? No? You simply divide 500 pesos currently times. Bawasan natin ng, ilan na nga daw ba? 10%. So times 0.90 or 90%. That must be 450 pesos. Variable cost, characteristic of variable cost, constant per unit. Ilan ba yung variable cost natin before? 495, let us show you there. 495,000 total variable cost. Ayan. Divided by 495,000 kasi yan nung ang usapan ay 1,800 units. So ilan tayo dyan mga kasama? 275 pesos. Ang sabi sa number 5 would increase 40 per ton. So plus 40. Ito ngayon yung total variable cost per unit mo. 315. 315 pesos. Contribution margin, new CM figure, 135 pesos. New CM percentage, 30%. With this, we can now respond to the requirement in number 5. Anong sabi? What sales volume in pesos? O the sales, variable cost, contribution margin, fixed cost, income. Okay? 94,500. We make it before tax by dividing it 60%. Ilan na nga ba tayo dyan? Okay, tignan mo na lang dun sa taas. 157,500. Okay, correct. 157,500. Fixed cost, 247,500. Total contribution margin, please add. Ilan tayo dyan? 405,000. Alright? Divide this by 30%. Ayun na yung sagot natin sa tanong. Final answer should therefore be 1,350,000 pesos. Final answer for number 5. IP number 13. The following monthly data are available for the Challenger Company and its only product SW. Sales, 400 units. And that gives you a total of 110,000 and 275 pesos selling price per unit. Variable expenses, 110 per unit, 165 CM per unit, net income 13,200. IP number 10, requirement letter A. Without resorting, no need to write or compute, without resorting to calculations, what is the total contribution margin at the break-even point? So conceptual yung tanong. At the break-even point, the total contribution margin margin exactly equals the total fixed cost. Therefore, our correct response should be 52,800. It should be equal to the fixed cost. Letter B. Mali yung sabihin mong equal to the contribution margin, okay? Strictly speaking, isipin mo mabuti yun. Kasi kung sasabihin mong equal to the contribution margin, kung mas malaki yung contribution margin sa fixed cost, hindi nagbabago yung total ng fixed cost So, it must be equal to the fixed cost. The CM must be equal to the fixed cost. Letter B. Management is contemplating the use of plastic gearing rather than metal gearing. Ito na naman, magtitipid. This change would reduce variable cost by 15. Pero no consequence. The company's marketing manager predicts that this would reduce the overall quality of the product and thus would result in a decline in sales to a level of 350 per month. Sales level 2, sabi niya dito. So, ibig sabihin, yung 400 magiging 350. Hindi naman decrease ng 350. Sabi niya, sales to 350. Okay? Should this change be made? Ayan. So, we have proven time and again that you need not prepare two income statements, one being already given here in the problem, and another one to compare it with 13,200, the result right here. We simply employ our incremental approach, wherein we embrace all the consequences of requirement letter B. Anong sabi? Pag ginawa mo daw yan, ang mangyayari, mababawasan yung variable cost ng 15. Madadagdagan ka ng 15 na contribution margin. Okay? Madadagdagan ka ng 15 doon sa matitirang 350 units na mabibenta mo. 5,250 advantage yon kasi additional contribution margin. Subalit, mawawalan ka naman, you will lose. So, lost contribution margin. Ng ilan? You will lose 50 units. Why? Because the 400, as we have said, becomes only 350. You will lose 50 units, giving you, bawat isa, 165 without the change. Are you following? So, 165 times 50. That must be 8,250. Aray, disadvantage naman yun. So, pag pinagbunggo mo yan, that must be 3,000 disadvantage. Decision, do not proceed diyan sa ganyang balakin, yan sa ganyang gusto ng letter B, because it would be detrimental to the income. Alright, letter C. Assume that Challenger Company is currently selling, 400 units of product SW per month. Management wants to increase sales and feels this can be done by cutting the selling price by 25 pesos per unit and increasing the advertising budget by 20,000 per month. Management believes that these actions will increase unit sales by 50% should these changes be made. Examine po namin kung ano ang effect sa income. Alright? Letter C. 25 pesos decrease in the selling price translates to decrease in contribution margin. Alright? Decrease in contribution margin. Mawawalan ka ng 25 pesos bawat isa dun sa 400 units that you are currently selling. That must be 10,000 pesos. Disadvantage po yun. Ano pa? Your fixed cost will increase in fixed cost. By how much? Ang sabi dyan, 20,000 pesos. 20,000. That is disadvantageous also. Ano pa? As an effect, also, again, another effect, unit sales will increase by 50%. So, if currently you have 400 units, it will increase by 50%. So, increase in contribution margin. There will be 200 new units aside from the 400. So in totality, it becomes 600. You have 200 new units giving you magkano? Giving you selling price of 250, variable cost of 110, or a contribution margin of 140. 140 times 200, this one must be 28,000. Advantage naman po ito. Okay? So 10,000, 20,000, 28,000, this must be, naku po, disadvantage pa rin. 2,000 net disadvantage. Decision, wag pa rin. Okay? No. For letter C. Requirement letter D. Assume that the company is currently selling 400 units of product SW. Management wants to automate a portion of the production process for the product. The new equipment would reduce direct labor cost by 20, variable cost yon, but would result in a monthly rental cost for the new robotic equipment of 10,000. Management believes that the new equipment will increase the reliability of the product, thus resulting in an increase in monthly sales of 12%. Same procedure, class, following the incremental approach. Should these changes be made? Very simple. First natin na consequence. Okay lang, even if your sequencing is not the same as mine, for as long as we arrive at the same answer. Because I assure you, if your answer is different from mine, you are wrong. Okay? So that I can assure you. That's why you should not doubt our material and our solutions. So, letter D, increase in contribution margin. Ilan tayo dito? You have 20 pesos sa baba times 400 units. Your contribution margin, total contribution margin will increase by 20 pesos bawat isa dun sa currently na nabibenta mo, which is 400 units. That is an 8,000 advantage, right? Increase in fixed cost, just like a while ago. That must be 10,000 disadvantage naman. Ano pa? New contribution margin. Why? There is a selling price dito tayo sa baba of 275. Go back to original data, 275. Not unlike kanina, all right? Na 250 ito kasi deducted na natin yung 25 from the 275. So 275 original data less the 90. Yung variable cost natin becomes 90. It is 110 less the 20 rito, so it becomes 90. Contribution margin of 275 less 90, it must be 185. So, new contribution margin is 185. Bawat isa dun sa 48 new units. The 48 being 400 units times 12%. So, it is the increase in units. This must be correct. 8,880 advantage. New contribution margin kasi. So, this is how much? Final answer, 6,880 net advantage. The answer must be yes. Go on. It increases the net income.